Welcome to another YouTube video, and today I'm going to be speaking about divergence, which is a concept everybody inside my community wanted me to speak about. So I'm just going to dive right into it. Now, divergence is basically something that we find in order to boost our edge probability in the markets. And divergence is basically this, if you want, this temporary fraud that happens in price, and we want to capitalize on that because then we know that there's manipulation happening in the markets, and we want to understand that that manipulation is something we don't want to be a part of. And so if we can easily avoid that manipulation, we want to go straight into it. So without further ado, I'm just going to go through normal market structure, and I'll say that we have lower highs and lower lows being created. And let's say that this is the Euro USD, and then let's say that this is the GBP USD. So I'll have it here. If you feel like you're gonna probably get lost in between the two, we'll have Euro USD over here, and we'll have GBP USD over here. So once we see the market is creating the lower lows and the lower highs, we see that there's a lower high and a lower low, a lower high and a lower low, a lower high and a lower low, a lower high and a lower low. Over here, we also see a lower high, a lower low, a lower high, a lower low, lower high, lower low, a lower high, and a lower low. This is how these pairs move together. Maybe not at the same time, but probably shortly after, you're going to see the same movement happen throughout these pairs. And that is because they both have the USD over here and the USD over here. So in both cases, because they both operate at the same one over here, you know that if Euro USD is stronger, then we're going to be trending downwards. And if Euro USD is stronger, then we're obviously going to be trending downwards right here. So if Euro USD is being strong at the moment, that means it's being strong over here and over here. So both of them are kind of weak. So when this happens, we see charts trending bearish. When Euro USD is weaker, we see charts trending bullish. And that is why when we day trade, sometimes you understand that there is a bearish movement, but because of the technicals that we know and the inducements and the lower time frame confirmations, we understand that price could be bullish, but we can find a sell position within, or we can find price coming back to a demand and then taking the buy position. So when that happens, we want to be able to, like I said, capitalize on that. And we want to follow these lower highs and lower lows all the way to a certain demand zone. Normally, we can't really buy at a demand zone that is a lower low because lower lows aren't demand zones and higher highs aren't supply zones. In other ways, I would want to say that if I am to find price trending upwards over here and I would draw this to be a demand zone, it'll be broken. So I can't have a lower low be a demand zone at any point in time until we have divergence. So for example, this is the lower low and this is the lower low. Let's say Euro USD continues trending lower. So what does it do? It has a retest of the lower high and then breaks on to create a lower low. But let's say GU has a retest, then fails to break lower and starts shooting higher. This over here is what we want to call divergence. So when we have price do lower low on one pair and bring this one over here and a higher high on another pair, we want to have that be divergence. So divergence and divergence. Now we understand that there's manipulation happening in the market. We enter on GU. The reason for this is because we don't know how much of a bearish price movement EU could still have before it shoots higher. And by the time this push happens, we probably won't have our entry criteria, we probably won't have the confirmation, and price would just shoot higher. It would leave inefficiency, and it would probably leave a huge demand zone. So when it wants to get retested and trend higher, you have a huge expensive entry with a huge stop loss. So it'd basically be an invaluable trade. So when this happens, over here, we start finding that this one is trending higher. We start finding that this portion over here probably had a retracement with an inducement and a push higher. So we know that buyers are now getting control. We're finding more higher highs and higher lows, and then price is trending higher. So we find that inefficiency in the market and we shoot higher with price. We understand that this divergence is the manipulation. We understand we can't enter here because we don't know how much price could continue lower before it shoots higher. So now we're going to go to the part that everybody likes, charts. That being said, I'm going to go ahead and delete, and then I'll see you in probably, well, this won't matter for you because I'll cut and then be there. So, you know, don't miss me, or if you want to miss me, whatever. Okay, so like I said earlier, but charts now, we can clearly see that we have a higher high, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. Now we're looking for price to basically go lower, but on GU it didn't go lower. Now I'm going to go to EU. So if I go to EU, I've replayed the charts for you, so you can clearly see that EU over here is trending lower. What does that mean? Let me see if I can open them. So now that I have these two charts next to each other, you remember I was doing the lower highs and the lower lows in purple over here, and you can clearly realize that this is holding and it's failing to create a lower low, and then it's going all the way to create a new high. So what we want to do right now is we want to make sure we forget about EU and we start focusing only on GU. That being said, you really don't need to look at EU anymore as long as you can find the lower time frame confirmations, inducements, a good demand zone, and a place to target. If you have these in mind, then you can go ahead and focus on GU. And by the time we do this, I'll try to go back and see how EU has reacted when we kind of fast forward to that. But you really don't need to. So I'm going to go back to seeing the chart only on GU. But now that you understand that a lower low is being created here, but no lower low is being created over here, you understand that buyers are basically getting control. But over here, we don't know when that is going to happen. And when it does happen, it'll probably be too late. So now I'll probably go to only GU and then switch to chart again. And now we're here. Okay. So let me just declutter the chart a little bit, and then we can focus on exactly what we need. Or actually, I'll go to the 15-minute time frame and then declutter. All right, so now that I am on GU, I understand that we have probably found a probable demand zone over here. I'll mark it. I'll see how it is. After the 15-minute, you want to kind of clearly see where you are. You'll go to the 5-minute, and this is where all the detail probably shows up. Now I want to kind of focus on what price is telling me, and I want to see if I actually missed the trade. So I see that there's that last imbalance over here, and I see that I have an inducement pushing higher, a retracement, and then a new high becoming having buyer control. Then I look over here and I find the last imbalance, and I'm like, great, this is where I want to target. So before I know I can buy, I want price to come and cover this inefficiency over here. When that happens, I open the charts and I look at the London session. I see prices trending lower, then going back higher, probably to print more liquidity over here. And then this trend line liquidity I know is probably going to be targeted in the beginning, which I know that it could probably trend lower all the way to cover that imbalance and then shoot higher. So I'll let price play a little bit. And then as you can clearly see, the session opens. Once the session opens, we see a tap into it. When that tap into it is there and you are still within the session, you go now to the 1-minute time frame and you're now trying to find an entry. Exactly like we said, you find price creating the 2-leg check, and you can clearly see we have a push, a high, a low, and a high. And then you can find that inefficiency in the price, which is here. You target this, you have the low, and you go to your 1 to 3, you go to your high of session, you go to your, when that happens, you can go all the way higher. You can target that previous supply. You can target the liquidity of the Frankfurt. You can even target the Asia high. Obviously, you're never always going to reach these targets, but for this one, when the volatility is on your side, you can probably see good movement. Now, after this, we want to make sure that when we're entering on Divergence, this is not an A+ setup, but when you find this basically fraud and manipulation happening in price, you want to be aggressive with moving to the break even. So what you can do actually is you can have that over here be a break even for you. Oh, I don't even have it. So we'll be here and we can say that this is break even. And then if that gets broken, we can move to break even. If it doesn't, great. If you don't want, you can move your break even to your entry. It's just really how you want to deal with it. And then once price taps you in, so you see a price taps you in, and then clearly you see moving to break even very quick. And then if I let price play, I realize that there's a lot more room for price to target. It takes out the session high and then it continues higher. Come back to it, I don't know if it took you out at break even or not, but it then takes out the supply zone and comes down, takes out the Asia high, and then it could reverse. We don't know if it continues higher or whatever, but after our targets have been met, we basically are in no man's land, so it doesn't really matter where you are. But for your understanding, you need to understand, and if a supply zone trends lower, taps into a higher time frame demand, that means the supply has served its purpose, so it won't work when price revisits that region. Then you have the Frankfurt high, which would be another liquidity pool. Then you have the Asia high, which would be another liquidity pool. And you have the session high or the session open, which would be another liquidity pool. So all these liquidity pools, after they get targeted, price has to come back, it has to rest, and then it has to shoot higher, and then do the same thing, invite more sellers, take them out, invite more sellers, take them out. As long as buyers have control, great. Now if I do the same thing, and if I go to EU, you'll see that EU also had the push higher. But there is strictly no entry for you on EU, and if there was an entry, it would be already out of the session. And even after that, price has probably shot higher with big bullish candles and not revisiting you until later. So it keeps inefficiency, trends higher, basically shows seller inducements, comes back here, taps into inefficiency for buyers, then trends higher. So when you're able to spot this difference in the market, you need to capitalize on it. And that for you, my friends, is divergence. Enjoy.